Will the ICICI Pru Gift Pro plan provide you with adequate life cover and sufficient corpus to help you achieve your financial goals in the long run? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand what this policy is about. So, this is a non-linked, non-participating individual savings life insurance plan. Some of the key features of the policy are: you have the flexibility in selecting the duration, which is the number of years of your guaranteed income as per your financial needs. You have the option to receive your guaranteed income that either remains constant throughout the income duration period or increases every year. The percentage of your money back benefit can also be chosen as per your requirement, and there is an option to withdraw future benefits in advance by converting it into a lump sum amount. So these are some of the key features of the policy, and there are benefits like death benefit, income benefit, money back benefit. So if you want to know more about these aspects of the policy in detail, you can refer to the policy brochure. Now let us take a look at the advantages and disadvantages of investing in this policy. So let us first start with the pros. There is a flexibility to receive your income on any preferred date, with the save the date option being an inbuilt feature in this policy. You have the flexibility to receive all your future benefits as a lump sum benefit at a discounted value. Under the low cover income booster option, you will be able to enjoy additional income by opting for a lower life cover. And once the policy acquires surrender value, you can avail loan of up to 80% of your surrender value. And there are disadvantages like, though you have flexibility in choosing various options related to income benefits and money back benefits, those options once chosen at the inception of the policy cannot be changed, and your life cover is not to be extended during the income period. And the income benefit affects your money back benefit. So you need to trade off between these two options. So these are some drawbacks that you need to keep in your mind before deciding to invest in this policy. Now, as we have a basic understanding of this policy, let us move on to the analysis part of the video, where we are going to conduct an IRR analysis based on the benefit illustration given in the policy brochure. So we are going to calculate the internal rate of return of this policy to see how much return we actually get at the end of the day, and is it sustainable in the long term, so to help us make an informed decision. So for calculation purpose, let us assume that a 35-year-old male has opted for this policy. He has selected 30 years of income benefit and 100% money back at maturity. The sum assured is 10.7 lakhs. The premium paying term is 10 years. The annualized premium is 1 lakh. So the income benefit starts at the end of the 12th policy year, and the income is constant throughout the income period. According to the calculations presented on the screen, the annual income benefit is 87,510 rupees, and the money back benefit of 10 lakhs is payable along with the last income benefit. The IRR for this cash flow is 5.64%. So the IRR is lower than the inflation rate. Those who need guaranteed returns may want to settle with this return, but look at the total investment period, which is 40 years. For such a long period, the investment return should outpace the inflation rate. The IRR of around 5.5% shows that you're losing the purchasing power of your money. So now, as we know that this policy is not giving us a desirable outcome that we need, let us move on to a comparative analysis, where we are going to explore an alternative strategy of separately investing in insurance and investment to see whether it can give us better results if it is invested separately. So here, for life cover purpose, we have opted for a pure term of a sum assured of 11 lakhs, which would cost us 5,800 rupees per annum. So the policy term is 11 years and the premium paying term is 10 years. So compared to the 1 lakh budget we had for premium in the ICICI policy, here we are able to save 94,200 rupees per year. So you can choose either PPF or ELSS investment as per your risk tolerance. So the corpus accumulated in the initial years will be utilized for income benefit during the income period. So now, as we are going to invest for a long term period, we have opted for ELSS mutual fund, because if you choose to invest in equity for a longer time period, it has better potential for good returns in the long term period. After 12 years, while redeeming the units, the capital gain taxes arises. So this tax amount needs to be set aside from the proceeds. The post-tax final maturity value is 21.65 lakhs. The accumulated corpus under the ELSS investment is then invested in a 7% return instrument. For annual withdrawal, the same amount under ICICI policy is assumed here. So, investment is fully withdrawn at the end of the policy term to match the money back benefit under the ICICI policy. So, the IRR for the pure term plus ELSS combination is 8.01%. So, the corpus accumulated under the investment strategy can be utilized as per your wish, and in the rising rate scenario, you can shift your investment or even you can utilize it for any other goal. But under the ICICI policy, the fund gets locked and you're compelled to settle with the income benefit. Then what is the final verdict? Is investing in the ICICI Pru Gift Pro plan worth it or not? This plan offers customization in terms of income benefits and money back benefits. The plan also offers other flexibility in choosing the premium amount, the premium payment term, income period, policy term, guaranteed income option, percentage, and year of money back benefits. Sometimes these many choices confuse the investors, so they may result in choosing the wrong choice. Other than the customization, there is another version of the money back policy as well. So you pay the premium in the initial years and receive the benefit in the form of regular income. This is the basic concept of the ICICI Pru Gift Pro policy. But you need to trade off between the regular income and lump sum benefit. Since this is another insurance cum investment product, you as an investor need to watch out for high agent commission as well. So we can say that this policy will not be suitable for your investment basket. Having a precise understanding of your personal risk tolerance and investment objective will be more beneficial.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.